Ladies and gentlemen, good day and welcome to the IFB Industries Limited fourth quarter FY2023 earnings conference call hosted by Nirmal Bang Institutional Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prasheel Gandhi from Nirmal Bang Institutional Equities. Thank you, and over to you, sir.
Thanks, Zico, and good afternoon, everyone. Nirmal Bang Institutional Equities welcomes you all to 4Q FY23 earnings conference call for IFB Industries. On the onset of the call, I would like to thank the management of IFB Industries for giving us the opportunity to host the call. From the management team here today, we have Mr. Pravir Chatterjee, Director and CFO, Mr. Raj Shankar Ray, MD and CEO Home Appliance, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. I now hand over the call to management for opening remarks, post which we can take questions from participants. Thank you, and over to you, sir.
Good afternoon, everyone. I welcome you all for IFB Industries investors call for the fourth quarter FY23. Joining with me today are Mr. Raj Shankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. Growth during this quarter was 11.8%. YTD growth for the period ending March was 22.9%. Growth during the quarter 4 was not as per expectation because of lower revenue in appliance division in February and part of March. The company has reported a total income of rupees 994 crore compared to rupees 889 crore during the same quarter last year. During the fourth quarter, EBITDA was 37 crore against a loss of 7 crore for the same quarter last year. As a result of lower commodity price, material cost reduced by 3%, which has resulted in higher gross margin. YTD revenue up to fourth quarter ending March 23 was rupees 4,126 crore compared to 3,357 crore for the same period last year. YTD growth in revenue compared to last year was 22.9%. EBITDA margin during the period was significantly higher at rupees 183 crore compared to 68 crore for the same period last year. Major reason for higher growth in EBITDA was higher revenue and lower material cost, and it was partially offset by the higher operating expense. With this, I will request you to start the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Amish Thakkar from SG India. Please go ahead.
Hi, sir. Thanks a lot for taking my question. So I just want to understand, in terms of your guidance on the margins in the air conditioning division, if you can just speak about the various steps you've taken in terms of improving the BOM. And if you can also break it down a level further in terms of where do you see the maximum improvements coming from? Is it the plastic components, sheet metal components? Is it the motor and the compressor and the electronics on top of that? Where do you see the major cost improvement areas have been, and I know your presentation mentions that by Q2 you expect to AC division to turn profitable, but if you can just give us granular details on why it is taking so long.
Yeah, Rajshankar here. So your question was on the steps for the AC profitability. Did I understand it correctly?
Yes, sir.
Okay. So in terms of the profitability, it comes from two areas. One is the material cost, for which there was a complete program in place which has been completed, and there's a second program which has started. Now, the reduction areas are primarily in the area of electronics, which would be, let's say, 60-65% of the total planned reduction. And the remaining come from areas like compressors and basic efficiencies based on volumes. So the material cost area for profitability is the biggest lever. And the second is, of course, the volumes and our extraction from the network, etc., which we have. So these are the two areas based on which the profitability targets have been set for the business.
Okay, can you just give us a breakup of in terms of all the cost reduction you've done till now? I'm assuming since electronics is still a major driver going forward, so I'm assuming plastics and sheet metal components you would have extracted, most of the savings already there, and there's not much there in terms of savings going forward.
Yes, that's right. As far as areas like plastics and sheet metal are concerned, those are not very large contributors per se, and there the costs are optimized from very early stages. So, assuming you had a press and a sheet metal part were running, whatever efficiencies you would get would primarily come because of volumes. So the savings on account of alternate purchases, negotiated purchases, etc. The biggest chunk is coming out of electronics and electricals, followed by negotiations and compressors.
And compressors, I'm assuming, will be completely imported.
Yes, completely imported. But in terms of where you get cost reductions, one is of course consolidated purchases. So let's say what we have been doing over the last year or so is consolidating the purchases across washers and air conditioners together. So you would have a source which would be supplying motors as well as compressors, and when you're talking about the whole bundle, the cost efficiencies are that much better. So that is what we've been doing, and that entire program has been completed. And now, as inventories move out, that cost reduction will come in.
And with regards to electronics, I just want to understand what is your level of backward integration there in terms of overall electronics? Are you importing the components and assembling it here, or how far are you in terms of your backward integration?
So, over the last 3-odd years, we have built up complete back-end depth in electronics. So the hardware, software, complete design is done by us internally. In terms of the purchase process, we have a handle on all the inputs into the controller board in terms of component level pricing. And we have also localized the manufacturing of the controller into India. So it's been localized for washers about 2.5-3 years back, and for air conditioners for the last year and a half. So we are doing everything within India.
So these further cost savings that you're seeing on the electronic side, which will be 2/3 of your overall cost reduction going forward, this will be on account of better design, better volume discounts based on higher volume. So where are these savings coming from?
Yeah. So the bulk of it is coming because we have consolidated the purchases and redone the sourcing strategy in terms of the manner in which we've discussed. We've discussed the whole bundle as opposed to one part, and also because of ongoing design-led processes that are sort of routine. But the bulk of it is coming through basically better purchase efficiency.
Okay. And the other question on your go-to-market strategy placement, so you've been talking about institutional sales, and I think your report mentions you've hired 12 people. So currently, I'm assuming there are hardly any institutional sales coming, and just want to understand what kind of institutions are you targeting? Is it modern retail shops? Is it ATMs? Is it offices? How are you going about building institutional business there?
So if you look at direct sales that we do, then this comes from 2-3 types of segments. So CSD, CPC channels are one segment. Then you have typically the program of purchase that the central government has, which is called GEM, G-E-M, which are sort of tender-based purchases. And the third is institutions like, let's say, an IT industry or a hotel or restaurant. So when we talk institutional sales, we mean all three. And by the end of the quarter two, we will have about 25 people working on this. As on date, it's about 12. And this is a team that we've been building up for the last 5-6 months, basically.
And as of now, what is the contribution of institutional channels?
So it is presently running at the rate of about 13 to 14 crores a month. It was practically nil about a year back. So,
and what is the potential
on this is quite high.
As per fair market share, if you were to take in this channel, what number can this be by Q2 or let's say end of next year?
So 20 to 25 CR is what you would say in the short term is possible.
Okay. And the range that is going here will be similar to what the range is facing in the market in terms of pricing and in terms of quality of products and everything?
Sorry, can you just repeat that?
The range of ACs that you are placing in this channel will be very similar to your direct channels, right, in terms of...
Yes. There is no product difference per se. It is the same product, but it's the fact that, that we need to be present. So if let's say a small corporate setup somewhere is buying ACs, then IFB needs to be represented, and we'll win some, we'll lose some, but there is business to be had there.
And are you going to distributors or are you directly building, like, especially when it comes to government tenders and all of that?
Yeah, so as far as the direct sales channel is concerned, most of it is direct from IFB to that respective channel there.
Okay. Thanks a lot, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Aviran Jain from SG India. Please go ahead.
Yeah, thanks. So my question was basis the disclosures that you given in the quarterly investor update. We still, our numbers suggest that the AC business is still running at a mid 7.5% EBITDA margin loss. What I wanted to understand was, given the material cost reduction program has been completed, with the current cost base for AC, where do you see this margin heading? Because there will be substantial gross margin improvement is what I am assuming will happen. So will it head towards rest of the appliances business EBITDA margin?
Yes, it will. So the gross margins, as far as the air conditioners are concerned, will improve with this material cost program. And once we get the volumes that this business should deliver, we will have similar margins. It will not be as high as, let's say, a front loader margin, but overall on a business basis, it will be quite similar.
Sir, if I were to just say for the volumes that were delivered in Q4.
Mr. Jain, may we request you to use the handset for optimum audio quality? Thank you.
So my question was that if we were to use the same cost base as what has been achieved and apply it on the volumes that were delivered in Q4, will the AC business EBITDA margin would fall into positive territory, or it is still dependent on the volume?
No, it would fall into positive territory.
So that's a very big swing. So basically, what I'm trying to infer is that there was old inventory which led to high cost of production per unit. But with the old inventory of components or finished goods flushed out, then the business is tracking towards a profitable margin territory at an EBITDA level.
Yes. So actually, if you see over the last 2 years, on the margin side, on an overall business basis, the AC business has led the P&L a lot. So the cost reduction program with the inventory that will be fully with the new bill of material, let's say from Q2 onwards, will make the business basically profitable, and that helps the overall P&L as well.
For Q1 as well, as in some bit of volume or entire volume, there will be some.
Yes, some effect will also come in Q1, but the larger impact will come from Q2 onwards.
Because, sir, in Q2, then there would be seasonality which would kick in, the volumes will fall, and I would assume you will still have, as there are variable costs in the business, but you still have sales promotion people, sales and marketing expenses.
Yes.
And other
Yes, you're right. I was answering you more from the point of view of the material cost profile, basically, in terms of the percent.
So would it be fair to say that on a steady state basis, you would be targeting, say, again, I'm not trying to get the right number, but at least a 5 to 7% plus EBITDA margins on the whole appliances business, including ACs?
Yes. Normally, we don't give a estimate, in that sense. It would be almost a forward guidance. But in these calls itself, Mr. Chatterjee and I, have spoken about our internal targets more than the figures you gave. So that is something that we need to deliver as well. And the profitability in the AC business is definitely one of the biggest levers. I hope that answers your question.
Yes, sir. As in, it does. Obviously, there has always been, it always has been a few quarters away phenomena. That's why I was asking. Otherwise, there was no way to ask it.
Yes. That's a fair thing to say from your side.
Okay. And there is no other market share. So, but you are able to get AC orders. It's a very impressive number, I must say, on the AC revenue side. And what's the breakup between third-party OEM business versus IFB branded sales? As in, are they both tracking to your expectations in terms of volume?
Yes. Both are more or less in line with expectations. We would, of course, want the IFB brand volumes to be much more than where they are today. And that has a lot to do with our channel extraction. So if we look till the last season, the larger accounts were still sort of, a lot of haggling was going on in terms of basically placement of the IFB ACs, etc. So this year, even though it has been for a shorter period, but the IFB ACs are now entering into all accounts, barring maybe 4 or 5 of the larger accounts. So going forward, we see the placement improving, and with the placement, the volumes improving. So the OEM volumes are more or less where we thought they would be, but the brand volumes, definitely we need to do much better.
Okay. Sure. That's it. And one more question and this is on the motor division. So is there, has there been any delay on the motor side in terms of your end? Because there is some commentary again on the investor report which says that most of the sales of the motor division right now are internal sales.
Yeah, this is Anand here. As you rightly said, to start with, the sales will be coming more from the internal captive consumption. But going forward, we aim to have at least 50% of our sales from external sources. There are challenges in getting customers from external sources because most of the appliances have their own captive motor units either in Asia or in Europe. But we are trying to find more customers outside of our captive requirements.
Okay. So how much are the sales right now? The reported sales in the investor report are all internal sales then, or these are some sales? Sorry, I'm not very clear from the report per se.
The motor sales you are talking about?
Yes.
Yeah. The motor sales, see, we have two more divisions. One is appliances motor division, the other one is the automotive motor division. As because appliances motor division is a captive consumption, the sales is not reported separately and it is netted off from the overall financial. But as far as the automotive motor division is concerned, we are selling to all other tier 1 customers, and what is reported here is only external sales.
Okay. And so, sir, as you mentioned that you are trying to find customers, and most of the customers you have an in-house appliance, as in motor manufacturing unit. Does that push your plans again by what can you find customers? Because BLDC still is an evolving technology, so I'm just conjecturing that some of the large OEM, which some of them have been mentioned in the investor report as well, may not be focusing as much on the BLDC manufacturing.
See, most of them have already have their own motor factories, either in China or in Slovenia or in Korea. So they are all aggressively pushing the BLDC technology, so which we are also doing.
So they don't have BLDC motor manufacturing in India, but they are importing it from...
Yes. None of the appliances manufacturers have their own motor industry in India. They are all importing either from China, Korea or Slovenia.
And related question would be, so what would be the penetration of BLDC motors as in the overall appliances side? Obviously you have ACs, you have refrigerators, and you have other appliances where motors would be used, but is the BLDC penetration a lot, which makes it a very large addressable market? And do they get any advantage sourcing it from IFB versus importing it from their factories in China or Slovenia?
Okay. First thing is about the advantages of the BLDC technology. It is, noise is very less in the first instance. Second one is life is like 3 to 4 times of the existing technology, and it is very reliable and durable. Second point of people sourcing it in India versus their own company imports, like they have advantage of getting just-in-time deliveries, and any supply chain disruptions that can happen in import are all taken care of if they source it locally.
And sir, the first question was actually the penetration of BLDC motors versus traditional motors in these appliances.
People are aggressively moving towards energy efficient solutions, and that energy efficient solution today is offered only by BLDC technology to start with. So within the next 2 to 3 years, I think most of the appliances will be using BLDC motors, or rather BLDC drives.
Sure. That's it from my side, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. I repeat, you may press star and 1 to ask a question. Our next question is from the line of Amish Thakkar from SG India. Please go ahead.
Hello?
Yes, sir, please go ahead.
Yeah, sir, I just want to, ask... Hello?
Yes, carry on.
Yeah, your presentation, sir, you mentioned on both microwaves and front loaders about microwaves you're entering 28-liter segment where you were not previously present. And similarly on front loader, you have mentioned 9 to 10 kg where I don't know if you were previously present or not. So just want to get your perspective on both these categories. You're among the top 3 players, for the last so many years. Are there still, what is the reason for entering certain segments like 28 liters in microwave and 19 series and front loader at this stage? And are there still more subcategories, in terms of weight or volume, subcategories where we are still not present? And what are your thoughts in terms of entering those capacities going forward?
Okay. So as far as the microwave segment is concerned, the two main competitors who we have in the market, which is the two Korean companies, have dominated this segment called 28 liters, where we did not have a product. And this contributes to roughly between 15 to 20% of the market segment. And this was almost fully monopolized by them. So we've been looking at a product configuration for this segment for quite some time, and that has now been plugged. So from, let's say, this month onward, those products are rolling out. So we believe that those volumes will be, with the plus and minus, so additional modules from the segment plus maybe some cannibalization with existing models, but overall it will be plus for us. So with this, by and large, in terms of segments in the market, we would be represented across all segments as far as the microwave thing is concerned. There is an upper end of the segment where we've launched a product called an advanced cooking device, which combines 4 or 5 functions into one, and the response to that has been good. So we are looking at further increasing products in that high-end range. So that will be more about creating a segment. Specifically, whatever volumes there are they are largely IFB volumes. And this is as far as the microwaves are concerned. As far as the front load segment is concerned, the 9 and 10 kg segment was where we did not have a product actually, and we've introduced it over the last 3 odd months, and these are being ramped up. And we expect just from this introduction alone, a volume increase to the extent of 15 to 20%. That is a growing segment, and it was a gap we had. Now that gap has been bridged.
So are there any other gaps remaining, at least in terms of microwaves and front load, where you've been market leaders for the last
No. So now for this financial year, it is about basically, now with these all segments placed, now it is about getting the volume.
Okay. And so last question on your refrigeration plans, do you see any application of BLDC motors there, or will that still be industrial motors driven?
So let's say the equivalent of BLDC motors is compressors, so fixed speed compressors and inverter compressors. And as far as the refrigerator industry is concerned today, it is a mix of inverter compressors and fixed speed compressors. It is more about price points and placements with respect to mid-end, high-end models, etc. So that is how the industry is playing it. IFB Refrigeration Limited will also have a similar sort of a mix of fixed speed and inverter compressor products. So in washers, for example, it is about motors. In ACs, it is compressors and motors. In refrigerators, it is largely the compressor.
Okay. And what are the timelines and any guidance in terms of, what are you targeting in terms of both in terms of your product placement, price positioning, channels, and overall market share that you want to capture there?
You're talking about washers?
Refrigerators, sorry.
So refrigerators, Mr. Chatterjee, would you like to answer that? Because
refrigerator actually, we have acquired around 44.4% share. It's a different company. They have started just producing. So, race they will be able to save.
Okay. But in terms of timelines, when do you expect the first launch to be?
So their production started last week of May, basically.
Okay, so in the next couple of quarters, I'm assuming.
Yeah.
And in terms of positioning, it will be a similar premium positioning, similar to what we've seen in the ACs, or will you be playing across price ranges?
So their positioning will be in the basket of the 3 main competitors, which is LG, Samsung, and Whirlpool. So they'll be in that basket.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Ravish Mehta from Plutus Wealth Management LLP. Please go ahead.
Thank you, sir. I wanted to understand that in terms of the margin improvement that you are expecting going forward, in case you were to bucket it in 2 or 3 aspects in terms of lower input cost, operational efficiencies with your volumes improvement, and the cost reduction program that you have taken, in which bucket do you expect would be the margin improvement, bulk of it would be coming from?
If I've understood you correctly, you're talking about where will the various contributions come from, right?
In terms of the improvement from here on, whether it would be volume driven or lower input costs or the other efficiencies that you have put in place.
So I would say that going forward, maybe 60% would be material cost driven. 30% would be volume driven, and 5-10% are the other cost areas.
Okay. And in terms of, say, the AC segment, if you talk about it specifically, how do you see the demand ramping up post this Q1, which is about to end for the next topic discussed? At what utilization levels are we expecting it to reach the break-even limits?
Yes, I'm struggling to hear you a little bit, but if you look at overall the AC industry volume, then in the March and April months, it was sort of subdued because of the unseasonal rains across India. However, I don't think that changes the essential demand pattern. So we would probably see good uptake in June because now the rains, etc., have sort of receded. As far as IFB is concerned, we have made a plan for this year, which is a combination of brand sales and OEM sales. And we would expect to be at roughly about 75-80% capacity utilization, basically, from Q3 onwards.
So, how confident are we on this volume utilization levels? Unlike previously, there were certain headwinds, we understand, but going forward now things have stabilized, inputs have largely, in terms of cost, have largely stabilized. How much is confident we are going in this next discuss about the volumes and the margin side?
So our volume confidence on the brand sales is much higher than before, primarily because our spread in the market has improved over the last 3-4 months. The OEM volumes, are still difficult to predict because they sort of go up and down based on stocking at the OEM end. But our confidence on the IFB brand volumes is much higher than before. As far as the material cost profile, etc., is concerned, that program is complete. So it is just about the figures accruing on the P&L now. So in terms of the profitability and the stability of the business, we are at a much better place as compared to the previous 2 years. Does that answer your question?
Yeah, sir, and just extending a bit, maybe improvement in the AC segment would be the only reason to improve the overall performance, or there are improvement areas in the home appliances segment as well in terms of both volume and the profitability that we are targeting?
Yes, so there are improvement areas in the other parts of the business as well. It is a good point that you have. So the material cost reduction program that we were running on the ACs was also accompanied by a material cost reduction program on the washer segment. And that has also completed. And as far as our network extraction, there is scope for improvement in both front loaders and top loaders. So while there is work to do in ACs, there is also an equal amount of work to do in products like washers, cooking products, which also is being done. So improvements will come from all segments, not just the AC.
But in terms of timelines, so in the past there were few mentions of timelines, and going forward, apart from ACs, the other areas that you mentioned, are we on track to achieve those timelines?
I couldn't hear you, please.
In terms of various timelines that you have mentioned in launching new products or achieving the efficiencies, all those timelines which have been mentioned couple of quarters earlier also, in terms of our progress at the ground level, how are we placed?
So if you look at the washing machine range, in terms of products, segments, etc., is now complete. I just shared a little while earlier that the 9 and 10 kgs on front loaders was a gap. We plugged the gap. In top loaders, there is a high-end segment of 10, 11, and 12 kgs. So we have introduced models in that segment as well over the last 3-4 months. So that is complete. So as far as the washer segment is concerned, in terms of the product range required for the market, we are complete. Ongoing developments for products are a routine thing. They will continue to happen. On the cooking side, in microwaves, we just discussed a few minutes ago, there was a gap in a segment that has been plugged. On the other cooking products like hobs, chimneys, ovens, etc., the range is complete. And on the cooling side, it is about us getting more volume out of the AC segment. So these are the broad areas. There aren't any major product gaps as on date, basically.
Okay. The last point on the IFB point, improvement or the renovations, etc., that's going on. In terms of the effects or the O&M spend, would it be material to understand from the P&L or the CapEx outflow perspective?
I'm sorry, I'm not able to hear you. Could you just repeat, please?
Mr.
In
Mehta?
terms of the, yeah.
Yeah, please, we request you to use your handset, please.
Yes, just a second. So in case of the IFB point improvement that you have been taking on since last year, is it a material aspect from the P&L or the CapEx point of view? And how much volume improvement we expect from that improvement, which would be concluded by say FY24 and or mid FY25?
You're talking about IFB points, right?
Yes, yes.
Yes. So in IFB points, what we have been doing is we've been redoing the ambience and the design of the IFB points. So we've completed 80 out of 500 odd. And that is an ongoing month-on-month activity. And over the next 12 to 15 months, we expect to change over all the IFB points to this new design. The feedback on the changes we have made has been in terms of the conversion ratios inside the store increasing because the design is better, the products are better placed. So whatever footfall we've been getting, the conversion ratios have increased. In terms of overall contribution of the IFB point to the company's sales, we would expect it to remain around the 14 to 16% mark because overall sales from other channels will also improve. IFB points will also improve, so it will remain in the 14 to 16% of sales broad range, basically.
Okay. And sir, your spend towards it, how should we understand it?
Sorry?
Your spending towards the improvement in the IFB points, the stores.
These are normal revenue expenses. These are not treated as capex. So if you were to redo an IFB point, there is some amount that the franchisee would invest. some amount that the company would invest. And this is all revenue expenses, all of an ongoing nature. This is not capex.
So the line for Mr. Ravish Mehta has dropped. May I request that we move to the next participant? Thank you. Our next question is from the line of Aviran Jain from SG India. Please go ahead.
Yes, sir. This was on the refrigerator business rather. So is there a separate commercial team which would be deployed to take care of sales and marketing there? So it would not have any overlap with IFB Industries on the AC, on the regular appliances business side?
So the full details on that are being worked out, and they will be completed within this quarter. But the essential sales and service parts, the thinking is that it will be a common force. There will of course be dedicated people for product management and network specialists, etc. The broad details, are being worked out. I think by end of this quarter, it will be done. So we'll be able to give you a full picture in the next conference we have.
Sure. So broadly, again, just trying to understand, would there be any transfer pricing involved that IFB Refrigeration will sell its unit to IFB Industries, which in turn will market it? Or there would be some sort of commission which would be paid to IFB Industries for selling and distribution of IFB refrigerators?
Not decided.
Would you like to answer that?
Yeah, not decided yet.
Okay.
Not decided yet.
In terms of it's a 100% overlap in my view on IFB Industries, what it does on the home appliance side versus what IFB Refrigeration would want to do for their refrigerators.
That is what I said. Actually, it's a different company. That the commercial process is being evaluated at their end. So, like Mr. Ray said, we would come to know about it maybe by end of this quarter.
Sure. Okay.
Thank you. Our next question is from the line of Manoj Kori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So my question would be on the margin side. So if you look at over the years, we have been talking about taking number of initiatives with regards to margin improvement. However, when we look at the performance, barring couple of quarters here or there, we have been relatively, if you look at the margin performance, has been very weak. And in fact, over last few quarters, the uncertainty is so high that in home appliances, we have been reporting losses. So can you throw some light, like what structurally, in fact, can change for us? Because whatever you highlighted, probably we have taken those efforts for washing machines as well. So whether we talk about electronics that we used to do, we were dependent on imports, and then we started building our own capabilities. Still, if you look at, we have not been able to make any significant inroads towards higher margins. So can you throw some light over there?
Yeah, so Manoj, that's a very good point, because at the end of the day, the actions are not resulting in an overall margin profile that we want. Then those individual initiatives are not adding up. So your observation is absolutely correct. If we specifically look at the last 2 years, 21, 22, and 22, 23, the problem that we've had is a significant increase in material costs from January 21 onwards, and the inability to pass it into the market, because that was how the market was. And added to that was this problem that we had about the AC business actually losing money. So if you look at what has to be delivered, other than this aspect of higher revenues and volumes, is a material cost back in line with, let's say, quarter 3 of 2021, and having this AC business not lose money. So one of the main reason why we have not been able to deliver the profitability over the last 2 years that we should deliver is sitting on these two eggs. Now, over and above that is the revenue related, which is the additional bonus. So going forward with the material cost program complete, the AC business generating money and realization of better sales, these are the three main levers basically for us to deliver the profitability that we should be delivering.
Right.
Does that answer your point,
Yeah,
Manoj?
to some extent. My question here on following this, so if you look at, we obviously invested behind room AC capacities. And when we look at this category, the seasonality aspect is very high. So if there are, like, obviously, even you would have taken those things into your consideration while evaluating the new factory setup. But when we look at probably even today, after doing volumes, probably this is the second year of operation, and we still are making losses here. So don't you think, like, probably the outsourcing model would have been far better, which would have definitely, if you look at the fixed overheads, were definitely not a concern for you, and probably it would have been more of a variable in nature, and that would have been feasible for you?
Yes, so that's a fair point. But, how I would look at it is that the air conditioners that we are manufacturing and presenting as the IFB brand air conditioners, if you seek feedback on the performance, it is better than almost everyone. So at the end of the day, we've got an excellent product out there. Now, the problem that we had as far as the business is concerned on breaking through in the market, finding placement and getting volumes quickly, that problem would not have been solved even if we had outsourced, because that is a sales-related issue. But wherever we've got placement and got share in counters has been because the product has been so good. And this product to have outsourced would not have been possible. So, let's say 2 quarters from now or a year from now, with the business having done well, then we would have got the project where it was supposed to be. But an air conditioner in line with the IFB brand, in terms of quality, durability, premiumness, etc., that we would not have been able to outsource.
Okay. So this understanding, like, probably, is this understanding correct? That if we normally, when we outsource, probably the desired features or probably quality, so there would be some compromise, and that's the reason that we wanted to develop a...
Yes, I wouldn't basically use word compromise, but you can outsource anything. But if we were to basically outsource the specifications, the performance that we have presently,
Yeah.
We would have run through the same set of problems, because today the outsourcing industry in India is based on a standard platform being bought by everyone.
Yeah.
Whereas what we've created is a completely different performance platform. So if somebody had to develop that platform in the middle of, the pandemic and all the associated issues, probably they would have gone through the same cycle.
Can I add something?
Yes, please.
See, in addition to that, you will always have the number limitations, how many models you can have. Then, if you are importing, the fluctuation of exchange will always affect you. Third, in such cases, availability of spares over a longer period of time is always an issue. These are the additional issues that we always face whenever we import products for trading.
Right. So currently, if you look at the branded IFB AC sales, what portion would be coming from South and probably from non-South markets?
So currently the South is a total of maybe about 20-25%. Non-South is about 75%. That is a ratio which we need to fix, because our sales from the South has to be much higher than where it is today.
Okay. Okay. And the last question, if I may, if we look at the AC placements in the channel, so like how the channel mix would be currently, and whether we are into some of the national chains like Vijay Sales, Chroma or Reliance Digital. So how are we approaching things over there?
Sorry, could you just repeat that, please?
I just wanted to understand the channel mix for room ACs and also how we are looking to get deeper into modern format retail, so probably with national chains like Vijay Sales, Croma, Reliance Digital.
So, Manoj, this time we consciously decided to stay away from the three channels that you spoke about, simply because we didn't think it was worth the volume versus the cost of sale. So we have focused ourselves on other larger accounts and a lot on the distribution networks across India. So I don't think in the near future we would need these three chains for the volumes that we need to target. And we'd go there if the cost of sales was looking right. As on date, it doesn't look right.
Got it, sir. Got it. Thank you and wish you all the best, sir.
Thank you. Thank you.
Thank you. Our next question. Before we take our next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Amish Thakkar from SG India. Please go ahead.
So just want to double click on that comment you made about modern retail. So even in our microwave front load, top load segments, we are not selling anything through Croma, Reliance Retail. Is that?
No, we are. We are quite well placed actually. It's just that there is something peculiar about this AC segment in terms of the manner in which people, structure their schemes around some of the accounts. And it was our call that for this category, we would essentially stay away looking at the cost profile, basically. But for the other categories, we are quite well placed, and it is an ongoing agenda to improve our shares in these accounts.
Okay, so can you just give a breakup of your overall, channels? You said IFB points about 14 to 16%. Now, excluding ACs, what will be the split of modern retail, e-commerce, and other distribution channel that you have?
E-commerce for the year was around 14%.
Okay.
E-trades was around 34%. Distributor around 21%. Trade 13%. IB point around 12%. Rest others.
Just a request here, if you can start putting these numbers in your investor presentations again. You used to have these numbers earlier, but I think you're discontinuing at some point, so it'd be very useful if you can have them included.
For the numbers, I would request you to call me separately. I will give you the numbers.
Okay. And sir, on IFB points again, any plans of expansion, adding more IFB points this year?
So the additions are on an ongoing basis, but what we had said last year as well, and that is for this year as well, that redoing these IFB points, improving the ambience, conversion ratios, and franchisee profitability, those are bigger agendas than the expansion.
Okay. And all of these IFB stores are franchisee driven, or what is split?
No, about 160 owned are operated by the company, and the remaining are
94. 94 are operated by a company, and rest are franchisee owned.
Okay. And any guidance on your kitchen, modular kitchen business? It's only 7 stores as we speak, and your presentation mentions how you're planning to increase the footprint of your modular kitchen business. So, any guidance there in terms of how many stores you're looking to add there?
So, we put it into the investor report because this is a segment that we have not been doing well in terms of scaling the segment. So, therefore, we put the commitment into the investor report specifically. The present focus is that we are opening 1 store in Mumbai, and we are enhancing store presence in Bangalore, and there is a specific business target we've taken. And then for Goa also, we are taking a target. So let's say over the next 3 to 4 months, once we've got to these levels, then we've identified a list of stores where we can expand this business to. That is about 100 across the country. But our first target is to, deliver the numbers that we've put into the investor report this time.
Of course. And sir, in your kitchen appliances division, you have products like chimneys and hobs, which I'm assuming you're selling only through that channel. And is there any plan to take it outside the IFB points and your modular kitchen business and launch some of those products to depend on, I'm assuming the channel will be very different from the channel you have for washers and ACs, but is there any thought about entering new categories in kitchen appliances or?
So we are not entering any further categories. Right now, chimneys, hobs and built-in ovens, the focus is around this. We've taken a target of taking more business from the other, the typical IFB point stores that we have. And in terms of expansion into multi-brand format, we've taken a target of 1,000 stores over and above the IFB points we have to be completed within Q1 and Q2. And the overall internal target for this business is to reach a level of basically 5 crores a month, followed by 10 crores a month. And this will come through the expansion in the channels.
And these multi-brand format stores will be different from the ones you have for machines, right?
Yes.
So the kitchen appliance focused multi-brand stores.
Yes, that's right. Yes. They are more kitchen appliance focused multi-brand stores.
Okay. Thank you so much.
Thank you. Our next question is from the line of Sai Kiran, who is an investor. Please go ahead.
Hi. Thanks for taking my question. Just trying to understand in terms of the cash flows, I guess after a long time, you guys turn FCF positive. And then what are your thoughts going ahead for the next 2 to 3 years? How do you look about in terms of cash utilization?
Cash utilization, the borrowing that we have, we are gradually paying off. And otherwise, we will capex, whatever is needed, we'll try to do it from mostly internal generation. And
But do you...
Yes, please.
Do you foresee any major capex in the next 2 to 3 years, sir?
No, as of now, we do not have. We have only routine capex that is there in mind, and the around 16, 17 crores of balance capex that is required for PLDC project to finish, that is there. Otherwise, engineering as well as appliance division would be mostly doing routine capex. And of course, the other capex are being evaluated, but nothing is finalized yet.
Got it, sir. So, a broad level question, if I look at for the past 10 years of the IFB's journey, there were many products which have been added, and the new segments what you intend to enter are also more or less done. Do you think still there are any new segments which you could consider probably in the next 3 to 5 years as a company as a whole?
So I'll answer that. The evaluation of new segments is a continuous exercise. But if you look at our priority for this fiscal year and the next fiscal year, it is to get the revenue profile and the margin profile that we need to deliver, which quite honestly we have not done over the last quite a few years. So if you're looking at this fiscal year and the next fiscal year, I do not think that we will enter any new category as such. There may be new models, new segments, etc. within a product category. But our aim now is to get the revenue profile and the margin profile in place. I hope that answers your question.
So that answers the question, sir, but I understand the near term, but broadly as a company, if you look at as a whole, do you see any kind of adjacencies in terms of product categories from what you have already, apart from the refrigeration?
Yes. So, there are lots of adjacencies that we could look at. So, for example, if you look at the air conditioner category, currently we are only in home ACs, split ACs. Now, there are adjacent categories of semi-commercial ACs. There are, these tower residential ACs, which are very popular, for example, in China. Now, those are adjacencies in terms of similar manufacturing processes, but a little bit of design and development effort. So if you look at the 3-year, 5-year horizon, yes, we will definitely extend into these once we've, fixed the profitability of the present business. Similarly, if you look at a clothes dryer, today IFB has what is called as a tumble dryer, hot air dryer. And there is another adjacency, which is a condenser dryer. which is, almost like a mirror image of a washing machine. So in the 3 to 5 year horizon, IFB will also extend it to that. So there are, of course, lots of adjacencies, but like I said, right now we are very focused on, delivering with what we have, what we should be delivering in terms of revenue and margin. Once this is done, that will lay the platform for many other things.
Got it.
I hope I'm being able to explain this to you.
Yes, sir, you are able to. So just one question, sir. I think one of the earlier participants, when he asked you were explaining about some sort of inefficiencies or whatever you could call on the sales side, because the product you guys have got the best. Maybe in hindsight, if you have to look back and then think about, how do you see what has gone right or wrong on your sales engine, and how do you intend to fix probably in the next 1 or 2 years, because that has been the focus for you, especially on the AC side? Thank you. That's it from my side.
Yes, so that's a good question you've asked, and that is the priority area to be fixed by us, which is the sales engine. Now, if you ask me what has gone right, then I think what has gone right is that in terms of the network we've created over the last 2.5 years or so, there has been a significant spread in terms of the IFB presence. India is a very large distribution market. For many years, IFB sort of stayed away from distribution. A very large distribution base has now been laid over the last 2 years. So that is what has gone right. What has gone wrong is the fact that for the expansion that we've done in the network, we have not been able to realize revenue in line with what we should be realizing. And in terms of getting the team together, getting the productivity fixed, just ensuring that at the end of the day, the result in terms of sales is delivered, that is a large area to be fixed. So it is not a 1-2 year agenda. It is an agenda on which we are already late, quite frankly. So if you had asked me plus and minus, this would be my answer.
In terms of corrective actions, or what is that you are trying to do to fix this, if you can explain that, sir?
So what we are doing is on 2 levels. One is we are spending a lot of time having senior people move in the market, look at the nitty-gritties, and fix areas related to the sales process. This is one thing that we are doing. The second is that at the end of the day, the sales is about people. So structural changes were required. The company is very actively doing that now for the last, let's say, 2 quarters or so.
Got it. Thanks, sir. That's really helpful. Highly appreciate it. Thank you.
Thank you. Our next question is on the line of Ankit Shah, who's an investor. Please go ahead.
Yeah, hi. So my question is on this refrigeration company, right? So first is that, is there any plan to sort of consolidate this in the future? Secondly, what percentage of the BOM will be imported? And third is in terms of the since this will be I'm just trying to understand how the transfer pricing will work. Like, will they sell to us and we sell to consumers, or they'll use our sales infra? So how is that going to work?
Mr. Chatterjee, would you like to answer that?
Yeah, as I have already explained, the IP refrigeration, there is being commercial part. They are evaluating at their part. We'll come to know about it maybe end of this quarter.
Okay. So meaning but the transfer pricing is also not clear yet in terms of how this is going to work.
Sorry, I couldn't hear you, please.
No, I'm saying, will they sell to us and we will sell to, our, or will they sell directly and then pay us a charge for using our sales infra and all of that?
But that is not yet clear to us.
Okay, got it.
Definitely, because as far as we understand, they will definitely do something of their own also.